Ladies and gentlemen, welcome. This is Christopher Aaron. It is the 31st of August. Welcome to the first significant correction that is unfolding in the precious metals, especially in the mining sector. If it seemed like these things were going to keep going straight up, this is how this sector works. There will be strong advances, and then there will be these significant pullbacks, which will give newcomers an opportunity to average in. And if you were in the much earlier phases of this bull market along with us, you are still sitting on some pretty serious profits. And we will look at some of the possibilities for how far this correction could go. I do believe this is going to be an excellent opportunity for those people who are looking to make some long-term investments in this sector. This update, we will do things a little bit differently because I have had a lot of people who are asking about the mining sector. Nothing has changed very much with the prices of gold and silver themselves. So we're going to focus a little bit first here in the beginning, just look at gold making a new low for this move, coming back into the very strong support zone that I've been outlining between 1285 and 1305. I'm expecting a bottom to form in that region for the price of gold. It could have been today. There could be some more bouncing along in this zone that has to happen. It could come back into that zone further. That's my best expectation for a low in gold. Silver, notice the difference here. Silver did not make a new low for this move today. So what is that telling us? The gold to silver ratio actually fell today. Silver gained value relative to gold. Now, typically when the gold to silver ratio is falling, that means that precious metals prices are rising. So today was a bit of an anomaly in that the ratio fell as the price of gold fell and silver was basically flat for the day. If the ratio continues to fall, I expect it will be when the metals are rising. It's rare to have a ratio falling significantly with the metals falling. So that's another one of those indicators that is telling me that we are probably in a pause in the bull market right now. So when you are looking at the GDX, in bull markets, the strategy is to buy on the dips. I believe this is a generational bottom that formed 6 months ago, and I was doing my best back in December, January, February to really pound the table and tell people how undervalued these companies were. You can go back and watch those videos. I'll leave all the videos that I've recorded posted for people to watch. You can go back and watch those videos. And the sector moved 160% higher from 12 to just over 31 on the index, on the GDX, in 6 months. Now, that is nothing less than an impulsive move. We call these impulsive moves when you have something like that where it's basically just a whole new class of investors who came in and said, get me in, I want to own this sector. And these types of moves, two things. One, they cannot last forever. They cannot continue to rise at a 300% annualized rate. That would be insane. I've never seen a sector ever do that in the history of studying any of the capital markets. So this pullback is completely normal. But number two, when you have such an impulsive move like that, such a strong move in 6 months, it tends to signal something that is coming for the sector that is going to be lasting longer than just the first impulsive wave. You could use an Elliott wave theory here. You don't even have to use Elliott wave. I think these impulsive moves can move in other wave patterns. But this is nothing less than an impulsive move when you see 160% in 6 months. So another thing about this long-term chart is I often reference this. This is more for some of the premium subscribers who are looking at individual mining companies, and we're following this very closely with individual mining companies. And I want to explain this for people who are just starting to become interested in this sector now, because you're probably sitting on, if you've just become interested here in the last month or two, you're probably sitting on about 20% losses or so. And that's to be expected. There are going to be between 25 and 35% corrections in this sector pretty much every year. But that is not going to stop this from moving significantly higher if the prices of gold and silver do what we all believe they are going to. So these corrections are very normal. And I use this type of analysis. I'm big on this. This is called stage analysis. I'm calling this a stage 1 base that the entire sector is forming here under the 30 or 31 level. It popped higher right above 30 and gave a false break above that before coming back down, which is kind of typical for the first attempt to break up over this base. Now, what am I talking here about this stage analysis? This is something, there's a number of technical analysts who use this type of analysis. It doesn't seem to be that popular anymore, but I find it extremely valuable. I first started studying this from Stan Weinstein in one of his really good books. And basically the theory behind stage analysis is, it sounds very simple, but every market moves in these 4 distinct stages. Stage 1 being a basing pattern, stage 2 being a strong bull market, stage 3 being a topping pattern, and stage 4 being a bear market. Now, the gold and silver mining sector just finished a stage 4 bear market that lasted for 3 or 4 years and then was basing toward the later part of that. You could argue it was actually basing for a year or 2. So the gold and silver mining sector has just approached the end of its stage 1 base, according to the analysis that I am doing, near that 30 level. So really the gains, although they've been significant, I believe they're actually only representing the first wave to come in this sector. Keep this in mind. Let's look at an example, a really clear example. This is an advanced stage 2 gold mining company. I do not own this company. It's called Richmont Mines. I do not advise you to own this company. I'm simply using it because it shows a really clear example. So Richmont formed this after falling from 14 all the way down to $1 per share, formed this really nice looking basing pattern between 2012 and the end of 2016. And notice it based here under 5.5. It's always a zone that we're talking about. It's never one precise level. That would be a little bit too strict. This basing pattern below 5 that lasted for about 3.5 years. And then notice when the base was broken, the stage 1 base, boom, the price of Richmont Mines tripled over the course of the next few months. So you get very rapid gains when either stocks or commodities or sectors advance through a very clearly defined stage 1 base. Let's go back to the GDX. What I'm arguing is that when you look at the entire sector, so that was one of the strongest companies, and what we've seen are a handful of companies that are leading the sector. I'm not going to mention any names aside from the example I just gave, but there's a handful of companies that are leading the sector that have already clearly broken out of their stage 1 bases and boom, we're already reapproaching their all-time highs in a stage 2 advance. What I'm saying is the entire GDX, which represents approximately 50 gold and silver mining companies, the average, some good ones, some not so good ones, the entire sector is forming a massive stage 1 base here under this level around 30, 31. When this breaks, the entire sector is going to have the equivalent of a massive gust of wind at its sail. So everything's going to start rising in a much quicker fashion when this level is broken. This could take some more time to do that, and these are the dips that you want to be taking advantage of if you understand this form of analysis. We see the stronger companies that have already broken out, the leading companies, Here we're talking about the rest of the sector. So the strategy is not to chase the top performing companies. It's to find the next set of companies that are about to have these massive runs when we have the wind at our backs. So in a bull market, you want to be aggressively buying these. I believe this was truly the buying opportunity of a generation. That said, it can be very painful when you're sitting on these 10, 20, 25% losses over the course of just a couple weeks. You have to keep this in perspective. And I am going to give an example from my own trading career, just going back into the last decade. Once again, this is a company, the name is Golden Queen Mining. It's a Canadian company that has a mine in California. I do not recommend that you own Golden Queen Mining. I do not own it myself. It was a good example from the previous cycle, and that does not necessarily mean it will be the best example for the current cycle, now 9 years later. Just for reference, I started getting interested in the precious metals back in the mid-2000s. And the leading indicator for me was the observations I was making as to the housing market. In 2004, 2005, I was living in Washington, D.C., and I was observing the housing market. And all around me, we would be seeing advertisements for the value of condos going up 50,000, 100,000 every year, year in, year out. Many recent college graduates, of which I was one 10 years ago, were convinced that the only way, the surefire way to get rich was just to buy a house and then sit back and you'd be wealthy in 5 or 10 years. And I just remember thinking, something is wrong with this picture. And I know there are other people out there who followed a similar path to arrive at this. And I took it to the point of really wanting to study the technicals as to individual stocks, sector analysis, technical analysis, etc. But that's how I arrived there, because once you start to realize the link between bubbles and manias, and that these manias that we witnessed with housing prices last decade is a similar pattern that it follows compared to other manias, especially, for example, the historical manias, the tulip bulb mania in the Netherlands, in Holland rather, and the stock mania in the 1920s, the NASDAQ bubble, etc., etc. The Japanese stock market bubble of the 80s into 1990. All these bubbles follow these similar patterns. That led me to gold. And so what did I do? I began investing in these gold companies in the mid-2000s, and especially I came across this company. I remember this example was so clear in my mind. I began investing in Golden Queen here at this first circle around 70 cents. And I remember thinking, mind you, this had already come down from $1.30, and it was trading at 70 cents. So it was already down 45% or so from its highs. And I was thinking, what a bargain. This is fantastic. I know the prices of the metals are going higher. I understand the fundamentals behind them. Here's a company selling for half off. I want in. So I made my first investment in Golden Queen, and I watched over the next couple of months as it fell 50% again, even from my entry point, down to 35 cents. I was looking at a 50% loss. This was going into the crash of 2008 related to the collapse of Lehman Brothers and Bear Stearns that almost took the entire United States economy down with it. People were throwing gold stocks out the window as if they were banking and mortgage stocks. And I remember I made another purchase then at 35 cents. Wouldn't you know it, Golden Queen fell down to 25 cents and actually hit an absolute low somewhere around 8 cents for one day. And I remember here in December, I was down something like 75% from the average of my first 3 purchases, and I made one more purchase. I believe in some I invested around $10,000 at the time into Golden Queen mining. And I was sitting on these huge losses and thinking the fundamentals are the same, but this company has fallen by so much. So what happened? It started to rebound as the prices of gold and silver began to rebound, came back a little bit. Finally, I was actually up a little bit because my average price, as I averaged into these lows, I got down to 38 cents a share. Now, I still didn't exactly know what was going to happen. Let's fast forward this chart 2.5 more years. Here were my purchases. Remember, I was down 75% at the time. 2.5 years later, from my average purchase, not the absolute low, which I never bought at the absolute low, Golden Queen had risen 740%. You can do the math with a $10,000 investment that I had made. That was one of several gold mining companies that I owned during this cycle. I began to make some sales in 2011. Mind you, I never sold at the absolute top, which hit over $3.80 a share. I sold somewhere here in the low threes. I think I even sold one of mine at $2.90 something. I sold in 3 different rounds, which is how I tend to do things. So my point is to keep in mind these cycles can be extremely violent. But if the fundamentals remain valid, the proper strategy is to buy the dips aggressively. Now, one other difference between the cycle from the mid-2000s through 2011 and the cycle today is that this high, the previous high in 2008, was a previous all-time high for the sector. The entire sector was coming off of a previous all-time high. What do we have now? The valuations are just coming off of a generational low. We're talking valuations for these gold mining companies that haven't been seen in 40, 45 years as of 6 months ago. Okay, so now the valuations of those companies have doubled. There's a lot more to go. The double here on this chart would have been somewhere in this range here, near 70 cents for my average price, for perspective. The executive summary. Try to keep the current action in perspective. Understand if this is a sector that interests you, we will be having these corrections regularly. The support zone for the metals themselves have remained the same. You have 1285 to 1306 for the gold market. The resistance is that long-term downtrend line we're still watching. It's been over 8 weeks now. It's been trying to break out of that. Every time it does, sellers keep coming and smashing it back down. Now, is that manipulation? Yeah, it absolutely could be. But the thing about my analysis is that I don't care if it's manipulation or not. I want to make money in this market. So if the price is going to come down, I'm looking for the levels that we can most logically buy again, where we expect the big buyers to be stepping up once again. Looks like it's going to be in this area, 1285 to 1306. I've been highlighting this for some months now. Silver is back in the upper ranges of its major support zone. It looks like it's trying to carve out a bottom. That low could come down further still. That wouldn't surprise me. The support zone is quite wide. It's a dollar support zone, but sometimes that's what happens. We'll look more at these charts next time. The next target is, according to my analysis, going to be above 2150 at a minimum. Keeping in mind that silver tends to overshoot during these late stage surges. By late stage, I mean the later phases of the initial move off the bottom for the first round, the first year of this bull market. I don't mean late stage as far as the entire bull market goes. So silver tends to overshoot and then undershoot on the corrections too. I believe after this surge, sometime perhaps 6 months from now, we will have to be on guard for a more serious correction that may require some protective measures. We'll discuss it at the time. I think we're still setting up for this fairly big move this fall to come over the precious metals. Said it before, the yearly 25 to 35% corrections will be occurring in this sector. It's a really good time to do some critical self-evaluation. If this sector is not for you, that's okay. There are things like physical gold and silver that are less volatile. There are things like US dollars and bonds that are less volatile. Of course, if you've made it this far, you probably understand the problems with the debasement of the currency, and you know that that's not a good way to accumulate wealth over the long run. Dollar cost averaging during the dips is the best way to go if you are looking at this with at least a 2 to 3 year time horizon. Thank you very much for watching. The next update will be a week from today. I should have my full hardware system back up and running. It's still in the lab undergoing some repairs. And I will see you a week from today. Thank you.